Hey everyone. So today I just wanted to talk about just general market conditions, what's going on in the market, how is everything getting affected. Um, so let's go down the list here. I mean, I discussed the euro currency trade yesterday. It's on. I got filled this morning. This is where it is. I think it's breaking even. There's no P&L, maybe a little bit down $12 or something. But I'm looking to collect. So my max PNL is 162 here. I'm looking to collect at least half of it. So I'll keep you guys posted, like whatever happens. The next thing on my radar is the crude oil. The crude oil position. There's no position. I don't have a position here. However, I normally first go to the charting section. Just look at where the price action has been. Um, the yearly lows is around 67. This thing has dropped below 75 once, I think. It went down to 74 something, the 74 handle. I'm still waiting for this thing to like go down before I go long crude oil. Yearly highs has been 95. Now there are some overall global demand issues with crude oil right now. The volatility was up during regular market sell-off, and then it dropped down, and then it's back up again today. Now I'm still waiting for it to like pop up above 50 or above 40 at least. Right now it's trading at 30. Um, it's yearly. If I have to draw a average line of volatility in this product, it will be around 36, 35-ish handle. I'm waiting for it to pop up around 40 so I can sell some premium here. Basically a contrarian trade, sell the premium whichever way the market has dropped or gone up. Why am I not trading this right now? The reason is that there's a trading cycle for 32 days, which is a monthly. Now here's a difference. All the yellow ones are like non-monthly cycles. Everything grayed out here is basically monthly. So another thing I wanted to tell you guys is look at this product. Look at this symbol here, CLV24, and go up and match it with the futures. Because we are trading futures options, each option expiration cycle here will um, settle into one of these futures. So at expiration, you will be given a future. Now these future options settle into futures. Index options settle into cash, meaning when the expiration happens, your account is either credited or debited with cash. When you trade futures options, your account is either credited or debited with futures. But Toss or Thinkorswim or Schwab now doesn't allow you to take any delivery, so you are totally safe from there. And we don't go up to expiration anyway. We adjust our positions at least 15, 20 days before expiration, so we do not ever get exercised. Um, I shouldn't say never, but I've never been exercised trading 8 years of my life, 10 years now. Um, but here's the thing. So CLV will be our is our next expiration cycle. The future expires in 35 days, and the option expires in 32 days. Now, why am I not trading this? Because first of all, there's 32 days left here. However, there's enough volume. There's enough. Look at this. There's enough volume, enough open interest here in both of these, in both sides, calls and puts. If I was going to trade it, I was going to trade it on the long side. Now, when I go long, I mean 70. My 17 delta sweet spot is around 70. Here's the expected move. If you want to see where the stock is expected to move, given this volatility, which is 30, we saw this 30 volatility here on the chart, right? 30, 52, whatever. The expiration cycle is showing us 30, 65, which is fine. Close, very, very close. $5.65. Now, yeah. Also, you can go down these numbers here and see where is the highest volatility. Now you can see the further out you go, you get a little bit more volatility. It gets pumped up in the monthly cycles more because there's more trading going on there. I'd rather stick to this 32. Well, I'm gonna wait until the November cycle gets below 50 days to expiration. Look at the open interest and volume here. Not much, right? Not as much as the 32 one. Now the reason for that is because all of these options are underlying the future, which expires in 35, people will roll their futures position from here, from the V cycle, which is October cycle, into the November one, which is the X cycle, 5 to 6 days before futures expiration. So when this thing goes down to 5, you will see a lot of open interest and volume go from here into the next cycle. And that's when the November cycle will open up better. You'll see more open interest and volume going in there, and then you'll see even tighter spreads. Even though this product is really liquid, you can see the spreads here, 59.61, 2 pennies. That's nothing in this product. It's such a big product. Now, if you want to see how big this product is, go here, futures. Look at the CL side, $10,000, and each tick is $10. Now, if you were to trade in an outright future, meaning if you were to buy an outright future, you can just test it here, go onto the ask on top, hit this. You're trying to buy one outright futures contract in October, go to confirm and send. And by the way, this is my real account, so I'm not going to trade this. It's a small account. Look, $10,000 is your buying power effect. This is how you know how much down payment you are going to make if you were to trade futures options. Anyway, next thing, if I were to trade this at 70, this is what I would have done, gone long, and always go one full strike out, not half strikes. Half strikes do not have enough volume and liquidity there. I'm collecting 14 ticks. Each tick is $10, like I said, so the total should be $140. My max loss is $1,000 minus 140, which is 860. My probability of profit here is 79%. Perfect. I like this number. Closer to 80 is my sweet spot. Over 80 is awesome. You get over 80s when there's volatility pop. Now, if this volatility was around 40, 45, 50, you would have gone further out of the money, and you would have gotten this at 80, 82, 83%. But it's fine. 79 is not bad. So I would have taken this trade like this. However, I'm waiting for this thing to drop a little bit more, around 73, 72, so that I can go further out. And at that point, I will get my 70 deltas around 67, because I looked at it before when it was down. And when that happens, I'm thinking about taking a position in the crude oil market. Fine, let's move on. Next thing, what else is there to take a position? SPX options, SPX futures. Look at the chart. The market has gone up quite a bit. I am not interested here. I'm not interested to go long here, because on the long side you will not get enough credit because the volatility is down to 14%. The long side would have made more sense at 40% call when it popped up. If I have to draw a line again, it will be around 14. That's where it is right now. It always comes back down to its average, long-term average, which is 14 this year. So I'm not interested in the long side. Am I interested in on the call side, on the short side? Yes, very much so. But however, there's a bit of a problem there, because I've sold calls in these indices before, and they've always come back to bite me in the backside. Meaning the market is so positively drifted in these indices and in the overall SPX index that I believe people do not have anything else to do other than go out and buy these indices and buy these stocks. If I have to go 17 deltas right now, I'm only going out as far as 57.60. Now 57.60 gets me very close to the all-time highs. I don't want that. If I were to sell calls here, I would rather go around 62, anywhere beyond 6,000. So that's what I'm waiting for. When this thing pops up around its all-time highs, 5,700, that's where I would look to sell some calls. Small amount. I don't really like selling calls in these indices because they always there's such a positive drift in there. Look at this line. Look at this trend line here, EMA line. It's just gone up. It goes up to the right hand side of the chart, and I don't like that. So what am I doing? I'm doing nothing in here. I'm doing nothing in any of these indices. However, there's one index that interests me right now, which is the Russell index. Look at the volatility here. Any choppiness in the market will show that the market is really volatile in this product. All this choppiness here, look at this, every single day trading around a range. There would have been a good strangle position here, but in my small account I don't really trade strangles right now, but I have traded in the past. Obviously the volatility here is slightly higher than other indices. If I were to trade this again, what would I do? I'd go short, because look, the index has fallen quite a bit. It has gone up, but again, it's not gone up enough towards its all-time highs. When rates drop, it's good for the small index, the small cap, which means they can afford their payments better because the interest payments are lower on their bonds and their borrowings. So it's always good for the small cap, and that's why you saw this run up here when the other markets were like falling. Russell was going up. This was all the rate cuts built in here. Can it go beyond 23 this year? I think so. It can go up to 24, 25. So when it goes up a little bit more, that's when I would look to like sell calls around, I don't know, maybe 25, which would be my level. Let's come down. Bonds. What am I looking at in bonds? Up 33 basis points today. 123.22 handle. It has gone up to 126. Yes, I'm interested in selling the upside here. 35 days out is totally fine with me. My next cycle comes in at 35 days. Yes, the other one is 70. So I don't want to go 70 anymore. I go 35. 70 is too far out. Look at the open interest volume. Good volume. My rationale here in the bonds is that I collect around 9 to 10 ticks. Each tick is 15.625. And if I have to collect 15.65 each tick, I have to collect 10 of those ticks. I collect 156. My sweet spot is there. Can I get that right now at 15 deltas? Let's see. Even at 20, I don't mind at 128, honestly, because the market is up a little bit, so I don't mind this trade, to be honest. I'm collecting 9. I can leave the order in at 10. I'm going to put this in, actually. Let me see the chart. My next step is to like go out and see the chart. Okay, I'm at the expected move. That's my break even. Anything shaded here is your expected move of this currency, of this index. 921. I'm getting 84%. Awesome. I like this number a lot. Now my next question is how much money am I having to put down here? Let's see, at 10 ticks. $288, not bad. I'm gonna go in. I'll put the trade in right now. Let's see if it gets filled. I think I'll have to do some price discovery here. Leave it there. Choose my limit orders. Change the price a little bit more later. That's pretty much it in the options, in the futures option side. These are all the smaller futures. If you want to trade, you know, first figure out how these products work, and then go into these. I'm going to be making a full-fledged what do you call it? A full-fledged beginners trading course, free on my YouTube channel. I'm going to be covering all of these things on futures options. Once it's done, I've made 1 or 2 videos so far. I need to make all of these just so that I can give all of you enough insight and take the fear away. I know there's a lot of fear in the futures options market and in options markets in general. I want to take that fear away. Once you do around 5 to 10 of these trades, and you make some money out of these, you will be a lot more comfortable going into the trades. What's happening with the yields? Okay, 2 years trading at 4%, 10 years at 3.8. So 2 years is still higher than 10, meaning the curve is still inverted right now. Okay, the further out you go, the more interest you should be collecting. 30 years is still trading at 4.4, around 4.4, which is a good sign. 5 years, 4.8. I don't even understand 5 years, so I know I'm not going to touch that topic right now. Do I trade the ZN product? ZN is the 5-year treasuries. Similar charts. I mean, all these bonds are like around similar numbers. So if I take a position in, usually I don't take a position in the currencies and the interest rates markets together, because I think they're both driven by Fed announcements, rate cuts, interest rates, all that. But right now, I think I saw a good opportunity in ZVEs because the market has been up. And I'm selling it quite further away from it. So I'm selling it at 129-ish. So I'm selling it at here. Actually, I'm selling it at 128. So I'm selling way further up. And then my adjustment technique will be to go and convert the spread into a iron condor. And then if I have enough time left. If not, then I'll move the whole spread out into the next expiration cycle. Anyway, good luck, guys. Okay, a few housekeeping items. I'm running a full free trading cohort on my my option selling strategies. You will learn all of this. We will go from the very basics into the end of the basic round, and then into a little bit of intermediary strategies. Keep going down, look at all these modules that I'm going to cover. I'm going to be covering all these strategies, some advanced ones, some basic ones, how to protect your trades, how to avoid any losses. I'm going to discuss all the Greeks, and what do we not do. Actually, we ignore all the technical indicators. You will never see me draw any line charts. I don't care what the market says. For me, it's the price action and volatility that matters the most. Then we'll discuss a little bit of psychology and discipline in this kind of trading, short options. There's nothing scary about this market. Trust me. I can hold your hand and I can take you through the process to teach you everything I know. Just do a brain dump on everything I know about these markets and what I have been doing. Follow my YouTube channel. This video will go on the YouTube channel. Follow it. It's a new channel, so I'm posting it. I'm getting some views here. So the idea is to keep doing that basically. If you are on Twitter or X, follow me. My handle is Long Short Idea. I just posted a good rationale behind the euro currency trade. Go check it out. Check my pinned tweet as well. Thank you everyone, and I'll see you in the next video.